and welcome back to our weekly update. I'm Charlotte McLeod with the Investing News Network, and I'm here to give you a quick look at our top stories for the week. Better than expected U.S. retail sales data sent gold tumbling to about the $1,750 per ounce level last week. And although it neared $1,800 midway through this week as concerns about China's Evergrande rocked the markets, it was back around $1,750 at the time this video was recorded. This week brought highly anticipated comments from the U.S. Federal Reserve. After a two-day meeting, the central bank indicated that it could start tapering bond purchases in November, assuming the job market continues to do well. The Fed also said it will aim to start raising its benchmark interest rate next year, although it emphasized that it won't do that until after bond buying has stopped. A recurring theme in the conversations I've been having is whether the Fed will actually be able to do what it says it plans to do. Popular mining industry figure Ross Beaty is one person who recently shared his thoughts with me. Here's what he had to say.
What I do know is that people are awfully faithful to rhetoric. If the head of the Federal Reserve says, "Oh, we don't think inflation is going to persist. It's going to go down again," they believe him. Why on earth would they believe stories like that? He says, "Well, we're going to control things by manipulating the interest rates." Well, that's fine, except if he tries to do that, he's going to crater everything else. And I just honestly, I don't know how it's going to end, Charlotte. This situation we're in right now, it's just getting more and more like an inverted pyramid that's sort of creaking around on a tiny little spot, and it's going to fall over.
Ross believes the gold price should be higher given current circumstances, and that sentiment was echoed by Sean Filer of Equinox Partners. He told me what's holding it back is the fact that market participants continue to see success with traditional assets. In Sean's opinion, gold will benefit when these more conventional assets start performing less well. Of course, the key question for investors is when that might happen. It's impossible to be certain, but Sean did say he's starting to see late cycle phenomena that indicate a change could be coming. We're going to finish this week with nickel, an important metal that we don't get a chance to discuss very often. INN's Priscilla Barrera recently looked at the Australian market, where activity has reportedly continued unabated over the last 18 months. The country's 12 operating nickel mines are all located in Western Australia, and although the stainless steel industry remains the metal's top consumer, companies are eager to step up and fill growing demand from the electric vehicle space. Restarts and expansion at the state's nickel operations are in progress, and with big offtake agreements already in place, like BHP's supply deal with Tesla, the market could be an exciting arena for investors to watch. That's all for this week. If you like this video, make sure you subscribe to our channel and turn on notifications so you don't miss future updates and interviews. You can also follow us on social media or click below for our free report or any article mentioned in this video. We'll see you next time.